Bloomberg Audio Studios. Podcasts, radio, news.
This is a special Bloomberg Daybreak Europe podcast bringing you reaction to the latest tariff announcement from US President Donald Trump. Hello, I'm Caroline Hepker.
And I'm Stephen Carroll. The measures targeting the global car industry are moving markets and come ahead of even more tariff news expected next week.
The charges are due to take effect from next Wednesday and will come on top of any other duties. Announcing the new tariffs, President Trump said that he was not interested in negotiating any exceptions.
If parts are made in America and a car isn't, those parts are not going to be taxed or tariffed. And we'll have very strong policing as far as that's concerned. For the most part, I think it's going to lead cars to be made in one location. You know, right now, a car would be made here, sent to Canada, sent to Mexico, sent all over the place. It's ridiculous.
Despite Trump's view, the levies risk disrupting operations for manufacturers who rely on highly integrated supply chains across North America. Shares in car makers in the US and Asia have fallen after the news was announced.
Let's bring in our EMEA news director, Rosalind Mathieson, for more on this story. Ros, we had been expecting an announcement on auto tariffs. Donald Trump had told us it was coming. But is this better or worse than the industry had feared?
Well, it's probably pretty much what they were expecting. The timing was interesting because first we were being told that auto tariffs would come after the April 2 reciprocal tariffs, and then Donald Trump pushed ahead either way. So these take effect in a staged fashion for entire cars. Obviously, it's April 3, and then for components in cars, it's a month later, because this is going to be quite complex for a lot of companies in the supply chain to ascertain what components in your car might be made outside the US, or even go back and forth across borders as part of the production process. So working out which bits you have to pay tariffs on is going to be quite complicated. So a little bit of time, at least for car companies, to work that out. But what it does show again is that Donald Trump is just determined to use tariffs in a variety of ways, and sometimes very quickly, and sometimes in an interchangeable way. He does change his mind, but you know, he's willing to use them and sometimes very quickly.
Markets are trying to digest this. Which companies and countries do we think are going to be hardest hit?
Well, as you were mentioning, that it's car makers, particularly in Germany and in Asia. Some of these companies send a lot of cars into the US, or a lot of components to Mexico, for example, and on into the US. And so you can see the impact on VW, for example, Hyundai in Korea, Japanese car makers also, a lot of companies that do not produce cars in full in the US right now. The one company it might benefit of, oddly enough, is Tesla and Elon Musk, because he produces a lot of his EVs in the US for sale there, and so he's kind of insulated. Ford equally, but even some of the other US automakers, they bring in a lot of parts from overseas, so it's going to hit them as well. And so the question is, what's the knock-on effect of all of that, not just on these companies, but then on the US economy?
We've also had reaction from some other foreign leaders as well. We were hearing from Mark Carney earlier, Prime Minister of Canada, the Japanese Prime Minister as well. Ursula von der Leyen was very quick out of the blocks with a statement from the European Commission as well. How should we read into what the response to this announcement has been from the US trading partners?
The thing that's a bit intriguing so far in all of this, as you say, there have been statements very quickly saying this is going to be damaging and so on, but no one's really retaliated. And in some of the earlier tariffs that we saw some countries come out and immediately respond with specifics and saying, we are in turn imposing XYZ on the US. And it seems they're all holding fire a bit. So they put these statements out. They're saying they're going to meet today, tomorrow in Canada, obviously, Mexico potentially having a meeting of the government there today, an announcement, but they all seem to be treading a little carefully here, and none have really announced specific retaliation. Maybe that will come, but they're also seemingly trying to work out in this kind of new environment how you manage Donald Trump and how you deal with Donald Trump. And is it best to come out swinging with something very quickly, or is it best to take a pause and then work out a calibrated response?
OK, Ros, thank you so much for being with us this morning. That is Bloomberg's EMEA News Director, Rosalind Mathieson. As she says, calibrations really around the world as to the reaction.
Well, let's dig into how the markets are calibrating to this with our Markets Live Executive Editor, Mark Cudmore. Mark, we've talked about the reaction in individual company shares. We've seen that fall in Asia and in US post-market trading yesterday as well. Can you explain the sort of macro impact of this as well? Because the currency market reaction doesn't appear as dramatic.
Yeah, so I think we've got to put the announcements overnight in context to what's coming next week. So we know the market is increasingly focused on tariffs, the US Liberation Day, as Trump calls it, next week. And I think we can't separate this preemptive announcement on auto tariffs from that. So I think the bigger picture dynamic here is that we are going to get some more clarity on US tariff policy. I'm guessing, like everything we've seen so far from this administration, we won't get complete clarity and a lot of things will remain uncertain. But we're going to have more clarity a week from now. And what's important to emphasise is while this is supposedly a really big risk catalyst on the horizon, and I think it is going to be negative for equity markets, it's going to also be negative for vol. I expect volatility to stay high into next week while we wait that clarity. But once the tariffs are clarified across the board and not just the auto tariffs, then I think we'll actually see volatility decline at the front end. It'll be like in the same way Trump's inauguration, we actually saw volatility fall all that week at the front end, despite hundreds of executive orders, because again, we just got some more clarity. What we'll actually see is a steepening of the vol curve. So both in FX and equity markets, we'll see longer end volatility increase because people will say, whatever tariffs are announced, are they part of a negotiation ploy, or how long will they be in place? So I think that's the dynamic. Is we're going to see a risk off next week, but it's going to be a low vol risk off. It may not seem like that if you're a cash trader in the moment, but from a macro point of view, that's the kind of way we're going to get. But I think that the longer term story here is not going to be changed under this dynamic. What's really important is we have seen the end of US exceptionalism. We had 15 years of it, markets exceptionalism, where we're now going to see capital outflows from the US on a sustained basis for years to come because the world's overexposed to US assets and they need now to become less exposed because they cannot trust what the laws will remain the same, or the tax rules will remain the same, or the tariff rules will remain the same to US exposure. So that is the longer term story that we're going to be trading for the next few years, and this is really just another marker in the road around that.
Yeah, and I think the question for people sitting in Europe is whether that does mean a benefit for Europe potentially, even amidst all of the risks and the potential impact. I mean, you have to think also that car prices in the US it's thought that they will increase something like $12,000 because of the new tariffs, because it will increase the cost of production of a vehicle by so many thousands of pounds. Do you think Europe is really potentially a winner here?
Absolutely. I think ultimately, much of the rest of the world is going to be a winner. But I think we're going back into a world where you've got to pick winners and losers a bit more actively. We're going back to a world that's going to benefit active fund managers over passive fund managers because, the bigger picture story is that US has benefited compared to the rest of the world. And really, you did not have to be particularly sophisticated. You just piled your money into US mega cap tech. If you didn't want to be so focused, you did it in the S&P 500 or NASDAQ, and it worked. That world's changing. We're now going to be going, US is going to underperform, but it's not so easy as just dump it into European stocks because some stocks will lose, some will gain. So you've got to you're going to benefit active managers. But Europe absolutely will gain. It'll gain from two aspects. One is that the world has to decrease its exposure to the US, and there are not many other viable options, and Europe's going to take a decent chunk share of that as people diversify around the world. And also it's got its own positive story around the paradigm shift around its spending. So that'll also increase the number of assets for reserve managers to invest in Europe. So again, these are longer term stories, but over the next several years, absolutely Europe will gain. Look, I kind of have liked saying this thing over the last couple of months, but I mean it, that I think euro dollar will trade to 130 before 104, 130, not 113, before 104, because I think that's the multi-year story here is we're going to get reserve diversification out of the US into European assets, and so Europe will gain.
Mark, we always think that you mean what you say. Thank you very much for joining us. Mark Cudmore, our Markets Live Executive Editor. We're joined in studio by Carl Tannenbaum, who is Chief Economist at Northern Trust. Carl, good morning. Great to see you with us.
Good morning.
In studio. President Trump says that these tariffs will mean US jobs, US manufacturing, and that he will enforce the tariffs. From a US perspective, will that work?
The supply chains that have arisen over recent decades are very efficient. They have raised standards of living. They have reduced cost. and unwinding them is going to be a time-consuming and expensive proposition. In addition, modern manufacture is not very labor-intensive. Certainly in the auto industry, robotics have been a presence for decades, and now with AI, the direction of the robots no longer needs as much human intervention. And so while certainly the wish is that manufacturing jobs lost over recent decades in the United States would be restored, the likelihood of that happening is not 100%.
Not 100%, surely far from 100% from the answer that you've just given us. So if it's not going to work from a purely US perspective, what does the announcement also mean for the global economy?
I believe that globalization created efficient companies, lowered prices for consumers, raised standards of living, and many other good things. And if you ascribe to that thesis, then the reversal of globalization can't help but raise prices, diminish standards of living, and also create quite a bit of disruption in the lives of many who are working in industries that are international in scope. Also, I think while the focus has been on U.S. tariffs, and to be fair, we've been the first in the ring, the retaliation coming in the other direction is also just getting warmed up. And if we have a full-flung trade war, there are analogs in history that illustrate just how damaging that can be. And I certainly hope that we do not get to that extent.
Did we massively underestimate how real the threats of tariffs? Because Donald Trump has talked about this subject for a very long time. Are you surprised by how much we're actually getting in reality in terms of announcements?
Well, speaking only for myself, absolutely. On the campaign trail last year, the president said that tariff was his favorite word in the dictionary. Now, I could think of several that I like a little bit better: puppy, cookie, sunset, pick your favorite. But we were on notice that tariffs would at least be threatened, but most of us thought that the threats would give way to negotiations long ago. But we haven't seen any negotiations, and the size and scope of the tariffs has been much larger. And many of us are beginning to wonder whether disruption is a means to an end or an end in itself.
I will put the counterpoint. Charlene Barshevsky, who was the former top trade official under US President Bill Clinton, has talked about trade surpluses. And this is the thrust of the Trump argument, that China is running such a huge trade surplus with the rest of the world that it must rebalance. You know, maybe the auto tariffs are not specifically targeted at China, but they are part of that Trump thesis that actually, you know, the US has lost out to the rest of the world, and that the Chinese have to make better efforts to boost their domestic economy, to rebalance things. Is there a point there?
Absolutely. And China is a special case because of the way that they've operated in the trade arena. I would just note at the outset that if a country has a trade surplus with the United States, it isn't prima facie evidence that they've been cheating. But there is evidence that China has been doing that. China, to its credit, has been trying to stimulate its own consumers to rebalance their trade position. And the consumer spending share of their GDP is about the same as it was 20 years ago. And so over the decades, China has continued to pull in market share and develop bigger trade deficits, and I don't think it's inappropriate to call them to account.
These announcements are headwinds for the global economy, but let's talk about a potential tailwind: progress on talks potentially for a ceasefire in the Russia-Ukraine war, certainly Europe moving to ramp up its defence spending. How much of a boost do you see that being for European economies?
For many reasons, a truce between Ukraine and Russia would be very much welcome, but there are some hard yards to be walked before we achieve that outcome. And absolutely, the forecasts for Europe are actually going up for major centers elsewhere in the world, they're going down. I'm sure that the Europeans would have preferred to stimulate other than at the end of a figurative bayonet. But the fact is that the prompting that this did to have the Germans and the Europeans open their budgets will be favorable for their growth picture, and their markets reflect that.
You've said that it's difficult and that you underestimated, along with many others, the reality of the tariff, I'll call it a tariff war, from President Trump. In terms of the tensions. How do you think about the tensions between the US and the EU? The EU says that there really wasn't any negotiation, particularly that they had no success with negotiating with the Trump White House. What does that mean economically, that those ties are now so much more difficult?
The risk of the current strategy is that the alienation that comes from the first steps will make it very difficult to come back together in any meaningful way. There's an injury felt by counterparts to the United States in the way that this is being done, and voices that might have normally been heard have yet to be accounted for. I certainly hope that the damage done is not lasting and that there is a phase to come yet this year where there will be more consultation and less provocation. But I hope that comes right soon. It's taken longer than I would have thought.
Carl, great to talk to you. Thanks so much for joining us in studio this morning. Carl Tannenbaum there, Chief Economist at Northern Trust, giving us some of the views on where next, really, after the latest announcement that we're watching markets react to this morning. European stock futures sinking on that news of a 25% tariff on all car imports into the United States coming into force from next week. This, of course, as we are expecting details on a broader tariff announcement from Donald Trump before then. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.